Hi everyone, hope you guys are all having a great day today, and in today's video I'm going to cover the whole entire market in terms of Dow Jones, Nasdaq, and S&P 500, including the economic calendar. Now I do post these videos out daily, so I highly encourage you to double check the latest video on my channel, so that way you get the most up-to-date information. And before I get to the charts, I'm going to go over the economic calendar. Mind you, we do have tensions in the Middle East, and then we also have the East ports in terms of strike. So that could disrupt the supply chain. And not even just that, even if it depends on how long the strike is, right? So if the strike takes, let's say, a month, mind you, these ships are waiting by the ports. They're not going anywhere. So for them to get new supply, they have to go back at one point and then get the new supply. So it's a delay of the supply chain in general, which could affect earnings. But then you could also consider it as if there's a dip in the market because the earnings will be affected, you could almost anticipate buying the dips as a good move because it's just a temporary stall for the time being in terms of supply chain, right? And then you could also argue that the ships could go to the West Coast ports and then unload from there. But then what could happen is it could back up the ports in general on the west coast, so it would still cause an issue in terms of unporting those ships and a backup of supply, right? So there's no real one fixed solution, and in terms of interpreting the potential issues, it's not necessarily singular. It's pretty complex, but it depends on how long the strike is. If it's temporary, it's not a big deal, right? But if it ends up taking too long, it could affect the supply chain, therefore earnings, potential dips, so on and so forth. But again, the term of the upside of the market is still technically somewhat potentially holding, but it all depends of what happens. And in terms of the tensions in the Middle East, the problem is there's retaliations back and forth, potentially causing further issues to prolong the tensions, right? So there's that. Now, in terms of the economic calendar, for Thursday, October 3rd, at 8:30 a.m., we have initial jobless claims for September 28. Previously, it was 218,000. This time around, expecting 220,000. 9:45 a.m. we have S&P final U.S. services PMI for September. 10 a.m. we have ISM services as well as factory orders for August, and ISM services for September, by the way. And at 10:40 a.m. we have Minneapolis Fed President Neel Kashkari moderates discussion with Atlanta Fed President Raphael Bostic. And then in terms of the charts, now the trend is still right now for the most part for the upside, but it looks like it's about to get pulled down in terms of longer term, in terms of if it's an uptrend or a downtrend. But before I get to that, I want to cover the more of the shorter term. So for example, for tomorrow's trading day, and covering the 1 month, 3 month, and 6 month charts. Right now we're looking at the ETF SPY ETF for the S&P 500. Same thing, just different ratio. Closed at $568.86. We can see after hours is slightly up at $569.71. And you can see dating back since 2010, we have an upward trend resistance line dating back since 2010. Mind you, the market was still going up. Doesn't mean it wasn't. It's just every time we went up to this level of resistance, it came down. We're in the mid zone. So there's been times we've been pulled down from mid zone. Doesn't mean we have to go all the way up necessarily. And the Nasdaq, looking at ETF QQQ, ETF for Nasdaq, same thing, just different ratio as well. Closed at $481.95. The reason I'm showing this is because the S&P and the Dow Jones have been at all-time high zones, and then Nasdaq wasn't necessarily at all-time high zones, but it was at a critical level. So given that the S&P and the Dow Jones are all-time high zones, and then the Nasdaq was at a critical point, and then the nature of potentially getting pulled down because of the tensions, the strikes, and being at those limits that I mentioned earlier, it could be a good time to technically get pulled down, especially since indications a little bit long-term are flipping to the downside potentially, and I'm going to show that. But again, I'm going over the 1 month, 3 month, and 6 month first, then I'll go over the 1 year, 5 year, and all chart. But the reason I'm showing this, it has the upward trend resistance line dating back since 2010 as well, just like the S&P. The only difference is in 2020 and 2022, it broke through and then came back underneath as of give or take April of 2022, had issues passing it in March of 2024, did pass it in July of 2024. I'm going to zoom in, you'll be able to see. So in July of 2024, this is when it broke through. This is the line dating back since 2010, upward trend resistance line. You can see it stopped us twice right about here. This was pre-market, this is false breakouts. And here's a July 2024. Mind you, this is the Nasdaq, more specifically the ETF QQQ. Now, the Nasdaq is the only one that did not surpass the July of 2024 all-time highs. S&P, Dow Jones, and Nasdaq all created all-time highs in July of 2024. The Nasdaq is the only one to not retest it and pass it. The S&P and Dow Jones did retest and pass the all-time highs. So you could argue we still have time to go up until we meet this level where it crosses over the upward trend resistance line since 2010 and then start heading down. But indications are somewhat flipping to the downside. So if we have potentially I would say another day and a half, 2 days of down days, I think that the indications will fully commit to the downside, in my opinion. But the reason I'm showing this is because for the past pretty much since August of 2024, I've been stating that this is going to cause us issues, and we've seen it. Yes, false breakouts, but you could see clear resistance lines again, or resistance to the 2010 upward trend resistance line. And these false breakouts, for example, like this one, is purely pre-market and after hours and pre-market. And yeah, we were over the line during the trading time, but it pretty much just sank down from that case, and then resistance tested and so on and so forth. So the question is, you're asking, what is this level? What is the price? Again, this is ETF QQQ, just different ratio from the Nasdaq, but it's ETF for the Nasdaq. $481.95 is what we closed at. And if we were to go to this level and try to pass it, right now we're looking at $491 and some change. Mind you, the longer we take, the higher the high will be. And then the previous all-time high, if we were to pretty much keep going sideways until we reach it, you're looking at $505 and some change. But the indications are somewhat trying to flip. Now, before I get to the 1 year, 5 year all, I just want to show the 1 month, 3 month, and 6 month. So that is, to me, a critical level. We've been testing it nonstop. Mind you, while we were testing this critical level of 2010, we've been hitting all-time highs for the S&P and Dow Jones. Again, another reason why I think we're at the limits right now for the time being. And then the tensions with the ports are kind of like forcing the downside, given that we're at the levels that were pretty difficult to pass to begin with, right? So the 1 month MACD line, you can see this, in case you're new to the channel, this indicates if we're a bearish or bullish movement. We are in the bullish right now. We passed the 50-day moving average. 3 month in the bullish movement as well. Got stronger as well. Testing, so because it's testing some averages as well, I should mention this, is for the S&P and more specifically S&P and Nasdaq. So they're both pretty much showing the same patterns for the 1 month, 3 month, and 6 month, where they're showing upside, bullish movement, but I think by midday, potentially, it could get pulled back down because there is a couple of moving averages that it could clash with. There's obviously resistance levels too, but given that the 1 month, 3 month, 6 month, it looks like they want to kind of bounce. I don't think those resistance levels will be more of an issue. I think the moving averages will be. And then if you look at 6 month, it just crossed over to a bullish movement as well. Again, the moving averages, I think, is what's probably going to cause us the most issues. Like, for example, horizontally, you could see there was resistance right about here, which resistance as well, plus support, which crosses over where the moving average is coincidentally. So for the ETF QQQ, you could consider about $486 potentially causing issues, right? And that would be trying to cross over the 50-day moving average, which in my opinion is pretty strong of a resistance at that point in terms of moving day averages. And so there's that. And the S&P is just showing the exact same thing for the most part. 1 month chart, bullish movement, and then also cross the 50-day moving average. So to me, it looks like more upside could be coming for the short term, just specifically for tomorrow. Again, this is just my opinion, so please do your own due diligence and research before buying and selling. 3 month chart, bullish movement as well, about to test the moving averages just like the Nasdaq for the most part. And 6 month chart, crossover to bullish movement, and then the moving average. So if you're wondering what that level is, again, we closed at $568.86, give or take, for the ETF SPY, ETF for the S&P 500. And the moving average is, give or take, about $571 and some change. Now, mind you, these moving averages do move while we're in terms of the trading time frame, but you can see a couple of resistance clashing price points and support within that moving average as well. So it might hold true to be in terms of actual resistance. We'll see. And in terms of Dow Jones, that is the only one that's different for the 1 month, 3 month, 6 month. It almost looks like a 50-50 split. So here's the 1 month. It's in the bullish movement, but it's about to arch down, it looks like. 3 month, it's in the bearish right now, but it looks like we want to cross over to a bullish. It is above the 50-day moving average. So if I had to guess, early part of the day, it could potentially actually be pulling up, potentially. But then here, it's in the bearish, but not necessarily pointing to the upside, and it is above the 50-day moving average, but one good pull down and we get below the 50-day moving average, we could start seeing continuation to a downside potentially. And the reason why I'm stating that is because for the S&P, Nasdaq, and Dow Jones, in terms of a little bit more of the longer term, so after tomorrow's trading day, it's showing more downside. Again, that could be for the case of because of the tensions in the Middle East and the ports having the strikes and so on and so forth, and uncertainty what's going to be happening moving forward, but it's showing more downside. So if I go to the SPY ETF S&P 500, you can see the MACD line is more prevalent to get pulled to a downside. Yes, it's still in the bullish movement, you could argue, right? And there was more of a green candle, so it could reverse the upside. It doesn't necessarily have to get pulled down. But since all of them are showing to the downside and almost exact same MACD line kind of crossing over potentially, I think it's going to get pulled down, especially since these conflicts are not being resolved, for example, unless they all somehow get resolved tomorrow, right? It doesn't seem like they're going to be resolved very quickly. That's the only issue. So here's the 1-year chart for the S&P ETF SPY. 5-year chart, it was in the bullish movement, but it looks like it's going to get pulled down. Red candle, so on and so forth, red volume increase. And then the alt chart is still somewhat 50-50, but we see red candle plus red volume increased as well. So potential slowdown in the market. Now, ETF QQQ, ETF for Nasdaq. If you go to the 1-year chart as well, same thing as the S&P 500, and it's about to get pulled down. It looks like to the bearish movement right now, still bullish movement, but it looks like it's about to get pulled down. Plus, mind you, another reason why, again, like I stated, the S&P, Dow Jones, all-time highs, plus the Nasdaq got tested by the 2010 level and it's going down. Like we've seen right about here, got tested and got pulled down. Are we going to see the same thing? Potentially. It's not a guarantee, but it's potential, right? And then just to show you for that, before I continue the 5-year and all, the S&P was at the all-time high zone right about here, right? All-time high zone. And then if I zoomed in for a 3-month chart, you could see the all-time high was recent pretty much, and we're still within that range right about now. By recent, I'm saying in September of 2024, right? Here was the July, I believe. Yeah, here was the July, and we passed that July. And that July all-time high did cause issues. You saw a whole stage of, in August, constant testing that July of 2024 and try to pass it. Couldn't pass it until later on in September, right? And then for the Dow Jones as well, all-time high zone, right about here. And if I zoom in 3-month chart, you could see recently in September, we created an all-time high, and we're pretty much within the same zone. The only one is the Nasdaq. And like I said, it tested 2010 potential pull down. Now to the 5-year chart for the Nasdaq, again, ETF QQQ, it could potentially cross over to a bullish movement, but it looks like it's a slowdown / getting pulled down and continuation to downside like we saw earlier. Yet now it's in a better situation than earlier, but it could still reverse to the downside. Red candle, red volume increase of sales. So again, being close to the 2010 level and having issues like we've seen in the past, right? Like, yes, we broke through, but there's been clear indications in the past where passing this level is not easy and there is pull downs, right? Every time it tests, it got pulled down. Mind you, the market was still going up. It does not mean the market is not going up. It's just, this is a clear indication that this level is a resistance level nonetheless, right? And then the alt charts is pretty much the same thing as S&P. Still somewhat 50-50, I would argue, but sale volumes have increased and it's somewhat showing slowdown in the market. Now for the Dow Jones is the only one, actually no, sorry, this was for the 1 month, 3 month, 6 month, but for the 1-year, 5-year and all charts showing the same thing as S&P and all that stuff and Nasdaq. 1-year chart, MACD line, potential pull down to the downside, again, coming from all-time highs, zone of the Nasdaq, so on and so forth, to 2010. It could, with the tensions and so on and so forth, it looks like it could get pulled down as well. 5-year chart, it's showing slowdown, which is kind of impressive because the Dow Jones was the strongest one with a 5-year chart showing continuation to the upside. So potential slowdown from there. Yes, red candle, but we'll see. And the alt chart's showing the same thing, slowdown, red candle, potential. So for the time being, we're going to have to see a few more trading days. If we see a good amount of red days coming up still, then these indications will be committed to the downside, in my opinion. But yeah, that's basically it for today's video. If you found it beneficial, consider dropping a like. It does help the channel, so thank you so much for that. I do appreciate it. And if you want to be notified when I upload my next video, because I do upload these daily, consider following, subscribing so you'll be notified when I do. Also, I'm going to be doing a day trading challenge, so if you're interested in that, consider subscribing as well, because I'm going to be doing that challenge. Trading, it might sound ridiculous, but I honestly think I will be able to do it because I've had pretty decent success recently for the past, I would say, 2 months, give or take. I've had success before, but specifically the past 2 months, I've pretty much honed in my skill. So it's going to sound ridiculous, but trading either from $100 to $1 million or $1,000 to $1 million. So if you're interested in that, consider subscribing and following on X and YouTube. And thanks again for watching. Take care. God bless and peace.